Arvind Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Good morning and a very warm welcome to you on Market Today. I am Shail Bhatnagar joining you from Dubai. Let's look at how the markets are structured for today, which is Tuesday. We have just 2 days left in this wonderful F&O expiry for the month of February, and the markets are now consolidating near record highs as far as the Nifty is concerned. We'll be doing a lot of stuff as far as details are there, but first, let's look at the main headlines. Indian stocks are likely to remain in a sideways consolidating band as traders work out the last couple of sessions of February's fantastic F&O expiry and investors fret over lack of strong cues. Pharma shares are in top form within the index. Large parts of the high beta, low ticket size stock universe are now facing profit booking as traders pocket gains even as they seed newer sectors to keep the bull run alive. Caution is advised on the long side in many PSU stocks. Welcome back on this lovely Tuesday morning on Market Today. I'm Shail Bhatnagar. And let's look at, as we always do, the long-term chart of the Nifty in the daily format. As you see, over the last 2 or 3 trading sessions, especially over the last 4 sessions, 3 of them have ended in losses for the index as it faces selling pressure at record levels of about 22,300. From there, we see a bit of a dip coming in. The chart will be presented to you shortly. Let's look at the intricacies of the Nifty. It looks as if that over the last 1 week or so, we've seen the Nifty enter a phase of consolidation after a record-breaking run on the index. The index itself is up about 3.5% over the last month or so during the month of February. And for the moment, the index seems to be taking support at the 9-day exponential moving average, and it is likely to be held. If we look at yesterday's trade, the low was 22,075. The index of closed at 22,122, down 90 points. The close was more towards the low than to the high of 22,200. So as you can well imagine, there is a bit of a pressure on the selling side coming and the index. The short buildups, the long unwindings are seen on select banks, pharma stocks and IT stocks. Yesterday, of course, the IT index shut 1.2% lower at about 37,600. And the long buildups, if any, on the index are seen on lightweight counters like L&T. And as I have mentioned earlier, the index has slipped in 3 of the last 4 sessions. So the Nifty's trading range for the moment seems to be narrowing, and we are seeing the index fall to selling pressure or profit booking, no matter how you want to tip it, during its journey from 22,200 to 22,300. So the bulls at the moment will be focusing on strong rollovers, which is, of course, over the next 1 or 2 days, we'll keep on tracking. You've seen a record-breaking rally coming on 4 large PSU banks, which is State Bank of India, Canara Bank, Bank of Baroda, and Punjab National Bank, as far as the Bank Nifty is concerned. And a lot of strong moves coming in on pharma stocks such as Cipla, Sun Pharma, Dr. Reddy's, all 3 at record highs. Energy companies such as BPCL, HPCL. So the mood, the tenor, and the underlying granularity of the Nifty is in terms of strength. But for the moment, it seems to be succumbing to selling pressure at higher levels. Now, what is likely to happen today? You see cues coming in from the overseas markets are absolutely flat. We've seen a very, very sharp artificial intelligence led rally coming into Wall Street all of last week, primarily led by very strong earnings from Nvidia. And we've seen a very, very strong move coming into a lot of software stocks. So, this is what is likely to happen on the index. We'll see option sellers dominate Nifty over the next two sessions as FNO's wonderful expiry draws to a close. Dharmesh Kant has joined us. He's the head of research at Cholamandalam Securities. Good morning to you, Dharmeshji. And what a fine sentiment across the Lal Street, bit of profit booking happening on Nifty at higher levels. How do you see momentum? How do you see sector rotation happening on the Lal Street? What are the sectors? What are the stocks that you're looking at?
Yeah, good morning, Sanji. Namaste. See, the trajectory remains firm. It's like a buy on decline kind of a strategy which has been working for last 7 8 months. Sometimes the declines are severe. Of late, for last 1.5 months, or you can say that the declines have not been so severe. I mean, 1% or 2% kind of a correction on the index is good enough for the buyers to get back into it. And it's not only about sector rotation. What we are observing is it's also about the rotation in the deployment of liquidity as far as DIAs and FIIs are concerned. So FIIs have been consistently, buying this market. Though January was negative month for the FIIs, but from Feb onwards, they have again turned buyers in the market. And sector-wise, the areas which attract immediate attention is like public sector banks, railway stocks, defense stock, and some capital goods segment. So that is where the maximum traction is happening. Pharma again continues to enjoy some benefit, though they have run up quite high, but still the buyers are there. The only fear and the only constraint of this market is new highs are difficult for even stocks to make. Someday Reliance or LLT or banking space takes the index up. But overall, they are now being consolidating in a narrow band at the top level. So I think Q4 earnings, and as we head nearer to the elections, general elections, things may still go for a breakout. But till then, it's a incremental high, but a lower incremental highs will be there on the markets and stocks.
Okay. So, with that background in mind, let's discuss Dharmeshji Asian Paints. The counter, of course, is undergoing a terrible churn, and that's because of the entry of Grasim into this very, very highly lucrative and margin-paying sector, which is the decorative paints segment. If you look at the chart of Asian Paints, the counter is trading at its lowest since April of 2023, so about a 10-month low here. Dharmeshji, what are the levels you think that Asian Paints makes sense to be accumulated in the portfolio for the long term? And how long do you think will this pain last?
This Shailji, this pain is going to stay here because it's not only Grasim entering into the foray. Later down the line, there are many others, including JSW Group. So big groups are entering into the paint foray. And see, the market is expandable and it's expanding, but the incremental expansion and the incremental competition which you are going to face, they don't match together. So I think there will be a lot of supply pressure coming into the paint segment, a lot of competition stepping in. And the projects are huge. They are not small projects which these groups have announced. So Asian Paint till now enjoyed the sole largest market share kind of a leadership. It's under a cloud. Even after such a correction, the valuations are still high. I mean,
Yes.
the PE multiples above 60 plus is something which entire the space is going to be taken re-rating for. And thereby, I think 20% more kind of a correction from here. Anywhere between 1600 to 1800 should be the fair enough target price for Asian Paint to start accumulating. But after that, I'm not very sure how much money you will make even if it falls to that level and you buy there.
Okay. Just to put this on record, the all-time high of Asian Paints is 3,568, and the correction so far has led it to about 700 points lower at about 2868. Of course, valuations are, how should I say, still very, very rich on this particular counter. And for a deep pocketed player like Grasim, which expects its turnover to hit 10,000 crore rupees over the next 3 years in the paints business, has sort of injected a lot of, uh, how should I say, uh, churn in the sector. Much will depend upon how Asian Paints figures out its strategy. But for the moment, the sector seems to be under margin pressure from a very, very deep pocketed player. Dharmeshi, let's look at how the PSU banking stocks have sort of held on to sentiment and the traders' mind as well as investors' thought process as well. Canara Bank, Bank of Baroda, Punjab National Bank, and SBI on the Nifty Bank have delivered supernormal returns in February. Among these four, which would be your best pick for the year ahead?
For the year ahead, I think Bank of Baroda is likely to be a best pick. Yesterday only they announced a sharp cut in the car loan rate, which is applicable till 31st of March. So this aggression is coming back into, I mean, it's not a coming back, it's a new form of aggression which all these public sector banks have now forwarded into, and they are now heads on with private sector peers as far as competition and garnering the market share is concerned. Technological advancement, most of these companies have taken, I mean, by public sector banking space, and at the same time now they are sitting on the pink of the health with a very good capital adequacy ratio, asset quality totally in control, and new NPAs are not happening. The slippages are very few when you talk about the public sector banking space. And granularity of the asset book is also increasing. So I think with the economy, overall the trajectory of the economy is very good. A 7.5 to 8% kind of a real GDP growth is expected over the next 3 to 4 years. So finance is where the maximum growth will come. The delta will come around 1.2, 1.3 is the multiplier effect on the entire AUM of the banking space when you look at that with respect to GDP. And there, I think public sector banks are better placed to take advantage of this growth. And in the space, all four are good. If you give me a choice, I will have a basket buy on all four of them. But if I have to single out, I think Bob is the best player out there.
Okay, at a record high, Bank of Baroda has delivered a stunning return of 69% over the last 1 year, and it's been topped out by Canara Bank, that's more than doubled, and PNB Bank, that's offered a return of about 157% over the last 12 months. So, Dharmeshi, what we'll do is we'll take a very quick break ahead of the pre-open rates, and we'll be back very shortly with live prices. Stay tuned.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back. The pre-open rates are with us. The Nifty's shown a 1% downtick, now just left to a 0.5% downtick. This will improve dramatically. 21,994 in front of you. Let's look at the stocks that are now moving. Index heavyweight HDFC Bank is 1% higher at about 1438. L&T, which was the top gaining stock in the Nifty on Monday, is up 0.7%, 3494. You have a fairly deep red tick on Reliance, down 2%. Of course, this will improve dramatically, 2910. These are early prices, they are volatile. ICICI Bank similarly is showing a downtick of 2.5%, 1028. This will also improve. Let's look at what Infosys is doing, 1/3% lower, 1655. Let's look at stocks that are on the gaining side as far as the Nifty is concerned. Tata Consumer 1187, 0.8% higher. You have Bajaj Auto trading in the green, 0.6% higher. We'll do a detour on the FNO space. Let's look at outperformers here. And you see Naveen Fluorine 5.8% higher, 32.90. This will also settle down to sensible prices. We have Canara Bank 1.1% higher, 580 almost. I'd just like to also inform our viewers that Canara Bank's board has announced 1-for-5 stock split as far as the bank is concerned. So you will see this stock price, how should I say, adjust to the split ratio in a couple of days. So you need to keep that in mind. Let's look at how NSE 500 is performing. The Nifty, meanwhile, slipping lower, 129 points down, 21,988. A very, very quick look at NSE 500. I want to see what are the top gainers here. Okay. Paytm 5% higher again, 449.50. There is news coming in that uh, the redoing of the payments bank board is in place. Let's see how that happens and how markets react to it. You have a nice green tick on PNC Infratech, 2.2% higher, 457. Crompton Greaves consumer is up 1.3%, 291. Let's look at the top losers. It's ICICI Securities, 2.4% lower, 815. Reliance again is down 1.8%, 29.21. NMDC slipping 2% lower, 230. Let's look at the most active counters. You will get an idea as to how things are moving. Reliance is still down about 0.75%, 29.52. These are pre-open trades. Let them settle down. The index is 86 points lower, but 22,000 is back with the bulls. In a short while, Ayush Mehta, technical analyst and chartist, will also be joining us. We are waiting for him. Meantime, let's continue our conversation with Dharmesh ji. Dharmesh ji, once you see the outperformance that's coming via third quarter earnings, any two stocks that you think merit attention on the long side after stellar third quarter?
It again has to be from the financial space. I think their IndusInd Bank came out with a very strong set of numbers, and post the numbers were announced, not much has happened on the stock price movement. And the second was ICICI Bank. So these two banking space does look very strong. If you look at Q4 and Q1 of FY 25. So from that perspective, I think both these banks, if there is some further decline because of the market correction, is a good positional buy for next 3 to 6 month kind of a perspective. And I do believe that the growth trajectory of 20% plus on an AUM with net interest income growing at 21-22% with stable NIMs are likely to be the case with both these banks. So well poised.
Okay, ICICI Bank is something that Dharmesh prefers, and of course, amongst the four top private sector banks, the only stock at its record high is ICICI Bank. Ayush Mehta is with us, technical research analyst at Nirmal Bang Securities. Good morning to you, Ayush ji, and a very warm welcome on Market Today. Any two stocks that you are looking at positively or negatively in today's market, sir?
Very good morning, Shalji, and to all the viewers and the panelists. I feel there are two stocks right now. The one should be for the buying and one should be for selling. The first buying infra. So if we talk about Capacite Infra, we see a double bottom formation on the daily chart, breakout of 20-day and 50-day moving average in the single day, and a flat pattern on 60 minutes intraday charts, plus a higher top, higher bottom formation on all the time frames. Plus, the more important thing is we have seen a good volume breakout in the stock. So Capacite should be bought for a target of 294. Here the stop loss will be 260. The second stock we will be selling here is Escorts Future. So if we see Escorts, we are seeing a rounding top formation, a trending resistance, and a negative RSI crossover, plus a breakdown of its 20 and 50-day moving average. So I feel Escorts should be shorted for a target of 2800 by keeping a strict stop loss of 2940 here.
Okay. a short on tractor maker Escorts, which has been slipping over the last five trading sessions, 28.90 in front of you, as far as Monday's closed is concerned. Let's bring up the chart of Bharat Forge. This counter was 3% higher as of yesterday, and the top performer on the infrastructure segment of the FNO space. 1175. A view here, Ayush, as far as what the charts of Bharat Forge are telling you?
So Bharat Forge has retraced from the high levels of 1330 to 1063, where it had given a multi-year breakout. But right now, the stock has given a good breakout of its 100-day moving average in yesterday's trading session. I feel one can have a long position in this by keeping a strict stop loss of 1150 here. And the short-term target we are looking forward here is 1186, and the second would be 1215.
Okay, so this is the view coming in on Escorts. Let's check a couple more prices when it comes to how stocks are moving. Whirlpool. Now, this company is in news with its US parent divesting 24% stake and bringing down their percentage holding to 51%. The counter 3.5% lower, 2150. At the moment, this looks to be in kind of selling pressure. Dixon Technologies, there is a downgrade happened on this stock by a renowned brokerage. The counter opening 3% lower at 67.40. No problem here because the counter is actually at a record high. So a bit of profit booking at current levels is always good. How about looking into NSC 100 and checking out stocks? Okay, infrastructure will be in focus today on the short side. Power grid slipping a bit lower, 1.3% lower, 284. ABB, after a stunning rally to a record high, slips about a percent lower at 52.50. Dharmesh coming back to the third quarter earnings, and especially from counters like ABB, counters like Siemens, as also Schneider Electric. Your thoughts and your views on this infrastructural back-end part, which is the electrical part of the infrastructure chain. How do you see them, and any favorites here?
Especially, I mean, the entire space is in for a very good growth trajectory, and it's likely to be there. The only concern out here is the valuation part. If you look at the valuation multiples, it becomes very hard to justify such kind of multiples based on last 5 years or 7 years. If you look at the revenue and the profitability CAGR, and these are companies which have been there in the country for last 10-15 years. So after 10-15 years, going into the play, you still are trading at where such a rich valuation multiple becomes a bit difficult to digest. I don't see anything going wrong with the businesses. The business will continue the way they have been. In fact, the business will continue to grow at a faster clip than what they have done so far, because the most of that new infrastructure plays which are coming into foray are definitely electronics and electrical led. So be it metro or tunnels or highways, a lot of electrification and electronic automation is happening out there where these players are prominent out there. Given a choice, I would still stick my neck with Siemens and ABB going for this play along with L&T. So these are the three players where L&T becomes a conglomerate because there are so many sectors into that company, but still it's one of the very good plays if you are having a time horizon of at least 3 to 5 years. Otherwise, just from trading perspective, it becomes difficult to pick and choose.
Fair point. Let's again put an eye out on the Nifty. It's settled flat, absolutely, 31 points lower, 22,090. The three index heavyweights, HDFC Bank down 0.6%, Reliance down 0.3%. And let's look at what Infosys is doing, absolutely flat at 1661. With these three indices absolutely flat, which these three index heavyweights trading in the red or being absolutely flat, you can well imagine that option sellers will have a field day today, just 2 sessions ahead of the FNO expiry for the month of February. What is on the positive side? It's Tata Consumer trading about 1182, 0.5% higher. And of course, you have a green tick on several pharma shares led by Cipla, 0.2% higher, 1473. A very, very quick look at NSE 500 before markets open. The IT index is most likely to open in the green today. Okay, we have pharma again dominating. Medant 1453, 1.2% higher. We have Can Bank about 1% higher, 579.30. So this is how the market is structured before we get an opening tick on the index. Ayush, coming to you, anything else that catches your fancy on the long side except for capacity infra?
So there's one more stock which we are liking right now, which is Subex Limited. So if we look at the Subex charts, after the results, we have seen some profit booking, but it is at the support zone currently at 36 to 37 is a quite ideal buying zone, which will give us a good risk reward favorable ratio. So we feel Subex Limited can be bought at the current levels as well by keeping a strict stop loss of 35.90 here. So if it sustains this level, which is the average support of 50-day moving average, which is around 37, 38 levels, then we can see upside rally towards 41. Then the next target would be 45. The most important thing here is stock is also making a double bottom kind of formation. Just one reversal is awaited. So Subex Limited can be looked at the current levels as well.
Okay, we'll keep an eye out on Subex. Dharmesh, among the cement space, which one is your favorite?
But I think it's like heavily congested space and a lot of capacities coming up. But going by the volume growth, and I expect the same to continue for the foreseeable future, ACC is my favorite. I mean, ACC Abuja, whichever you want, we can choose from there.
Okay, Ambuja, of course, now consolidating around fresh highs. One very quick, very short view, Ayush, on Ambuja Cement.
So I was looking at the charts of Ambuja Cement only. It has given a good breakout in yesterday's trading session only. I feel Ambuja Cement, you should hold the positions. And if someone wants to buy it, they can definitely buy at current level. The first target which is coming here is 624 by keeping a 6 stop loss of 598 here.
Okay, 598 is the stop loss, and we are waiting for Ambuja to scale newer and better highs. For the moment, ladies and gentlemen, we are waiting for the first ticks to come on this lovely Tuesday morning. Remember, the Nifty has fallen 3 out of the 4 previous sessions. We are just 2 days away from February's FNO expiry, in which the index has gained about 3.2%. Everything is in fine fettle. Now we'll be looking at rollovers as to stocks that are moving into higher trajectory, as to stocks into moving into lower trajectory, given the weight that the index has spent over the last 2 weeks or so. The fresh quotes should be with us fairly shortly. I'm keenly looking at Asian Paint. They are into selling pressure over the last couple of sessions. And of course, we have the rates coming in. Okay. Let's look first at what HDFC Bank is doing. 3 rupees 65 paisa lower, 1417. Let's look at Infosys, 0.5% higher, 1667. Reliance is 0.3% lower, 2965. This is the state of play as far as the 3 top index heavyweights are concerned. Let's look at the top gainer as far as the index is concerned. Nothing much happening here. If you look at the top gainer is Ultratech Cement, and TCS at about 4,031 is 0.7% higher. Ultratech Cement is about 1% higher, 10,025. Okay. The IT index is in a green tick after yesterday's very, very strong selling pressure. The index up 0.5% at 37,823. The Nifty Bank has opened flat, 80 points lower, 46,500. As I had mentioned in my opening commentary, 46,500 is likely to be held after 4 days of successive selling pressure. The Nifty 500 index has opened in the green. Let's shift focus and get into the FNO space in terms of top gainers. And that will be Canara Bank, ladies and gentlemen, 583, 1.7% higher. the stock reacting positively to the stock split in the ratio of 5:1 announced by the board. Havells is 2% higher, 14.52, and we have HDFC Bank Birla stock ticking about 1.4, 1.6% higher. Let's look at the loser side in F&O. Dixon Technologies profit booking 3.5% lower, 66.92. NMDC 1.9% lower, 230. Alchem and TVS Motors down about a percent each. A quick look at NSE 500, then I'll head towards Ayush. Okay, Whirlpool. Now, this is a pain point. The top loser 5% lower at 1200. Remember, the management has clearly said that it is selling its stake because of higher valuations that this particular MNC is quoting at. And the market's not taking very kindly to that kind of a comment. But Devyani International again, 1.2% lower, 160.35. This is the state of play as far as the markets are concerned. Very quickly coming to you, Ayush, anything that catches your fancy in this kind of an absolutely flat market?
There's one mid-cap stock which I'm liking right now, which is Sudarshan Chemicals. If we look at the chart of Sudarshan Chemicals, we are seeing inverse head and shoulder breakout on its weekly chart, plus a pennant pattern formation on its monthly chart, plus a trend line support reversal here. So I feel Sudarshan Chemical is looking good at current levels, can be bought for a target of 640 by keeping a stop loss of 584 here.
Okay, this is something that is coming in from your side. A quick view on how markets have opened apart from that in terms of the all-time highs set in. Okay, PNC Infra is 3% higher, 460. We have HDFC AMC clicking merrily away at 39.67, 2% higher. Within the cement space, Birla Corporation 1771, 1.7% higher. Jindal Stainless 667 for you, flat but still in the green. These are the stocks that have hit record highs in early trade. Coming to you, Dharmeshji, anything that catches your fancy in this kind of a flat opening that we've seen on Tuesday?
I think public sector banking space where some traction is being observed. From intraday kind of a perspective or a couple of day kind of a trade, that is the reason where one should be looking for an opportunity, and the names remains the same. I mean, Bank of Baroda, Canara Bank, PNB, and SBI. These should be the top four picks where one can pick and choose for the intraday kind of a place.
Okay. Again, I'll mark some prices because they are accompanied by a sharp surge in volume and a very sharp move in prices. Devyani International, this is the top volume traded counter, 4% lower. And we've already seen 76 lakh shares being traded, which is 1.2 times the 5-day average. The circuit on Paytm has come off 3.4% higher, 443. This is something that needs mention. About 38% of 5-day average volume has been done, 40 lakh shares. What's moving rapidly? This deserves attention. Birla Corp. This is a very well-known mid-sized cement player, 1772, fresh high. Ayush, coming to you. Strong volume play on Birla Corp. What do you think is happening?
So if we look at the charts of Birla Corp, it is looking very positive, and we have already initiated a buy call on this stock in yesterday's trading session for our clients. We feel Birla Corp is looking extremely positive right now, and it can be bought. Is the first target which we will see here is 1817 by keeping a strict stop loss of 1740 here. The second target, once it crosses 1817, then it will see 1850 to 1855 levels.
Okay. Let's look at this one in terms of how prices are moving. Okay. Fairly strong moves coming into the insurance space. NIACL, National Insurance, is up about 6%. And we seem to have a trend emerging on cement with JK Cement also moving at day's high. Let's look at the broader picture among the market indices. Let's look at the advanced decline ratio. For the moment, it's a complete control of the bulls within the market. 1,340 shares are in the green on the National Stock Exchange, compared with 650 in the red. The IT index is the top gainer. We track 19 indices for you. Of them, 5 are in the red and 14 in the green, led by software companies. And this index has 10 companies, all 10 of them in the green. Let's slowly also look at what the mid caps and the small caps are doing. The small cap index is up 0.6%, 16,227. And what's really good is that out of 100 shares, 83 are in the green. Similarly, the mid cap index of 100 shares at 49,230 is about a fourth of a percent higher. And out of 100 shares, you have 74 in the green. The Nifty 500 has about 355 shares in the green, 140 in the red. So the theme and the structure continues to be fairly good. IT stocks are doing fairly well. Ayush, coming to you, your favorite pick in terms of IT stocks: TCS up 1%, Infosys, HCL Tech, Wipro, all in the green.
If we talk about my favorite pick, I think valuation wise or the stock technical charts wise, Tech Mahindra is looking good at current levels, and we feel it has retraced a good level from the higher tops formations, and then we are seeing a reversal here in this stock. So I feel Tech Mahindra can be bought at current levels. So for the target of 1346, by keeping a strict stop loss of 1290 here.
Okay, fair point. Dharmesh, your top pick in terms of large cap IT.
TCS remains the topic in terms of large cap IT. If you look at Q3 numbers, they were the best numbers when compared to, say, Infosys or Wipro. SCL Tech was close by, but TCS, given the trajectory and the body language of the management was very strong, they did improve their EBIT margin, and they expect this margin to be consistent from here on. At the same time, the guidance of order book win of around $8 to $10 billion per quarter goes well. Though last quarter was a tad below 8, but I think this run rate will again come back to them. And they are the ones who have taken the initiative as far as AI-related software development is concerned. So their tie-ups are in place. I think 6 months more going down the line, they will have the products and offerings into the place. And they have also guided that the type of hiring they have been doing will undergo a change because they are more focused on the AI-related offerings. So that is where the main juice and traction will lie for most of these companies. And given the valuation multiples, now, I mean, they are fairly valued as of now, but still, I think if one has a horizon of, say, 2 or 3 years kind of a time frame, so 45, 4600 can be the target price on TCS based on present visibility of their business.
Okay, and without any doubt, TCS is the top performing stock within the Nifty today, up about 1.2%. So a technical call on the long side for Tech Mahindra and a fundamental thumbs up coming in on TCS. Let's also look at open interest gainers at this point of time. It's led by Idea Cellular. The stock was in fairly good shape over the last 3-4 trading sessions, but now seeing a mild bout of profit booking. This drop of 0.3% is accompanied by a rise in open interest to the tune of about 8.6%. Ayush, I'm sure you are now doing rollover studies. A couple of counters on the long side that make sense, and one or two where rollovers are strong on the short side.
Sorry, Shalji, I'm actually a technical analyst, so I won't be able to comment on that.
Okay, no issues. Let's just shift the discussion elsewhere. Let's look at ICICI General Insurance. The reason why I marked this stock is twofold. Not only is it the top gainer in the F&O space, we know it better as ICICI Lombard. What's really interesting is that this is at a record high. Ayush, coming to you, what is Lombard's chart telling you?
So I say that JI charts are extremely positive. We are seeing a very good flat pattern formation on its daily chart, and it has already given a breakout in today's trading session. It is trading around 1688, 89 levels. I feel it can be bought at current levels for a target of 1725. which is going to be a strong support zone, which is going to be a target zone for this stock. And the stop loss we have to maintain here goes around 1660, which is the support zone of the stock.
Okay. We've seen a very, very strong move coming in. Dharmeshi, this question is for you as far as insurance stocks are concerned. ICICI Lombard at a record high. But counters like HDFC Life, counters like Prudential ICICI have been long term underperformers. What do you think is the dichotomy happening between general insurers and life insurers?
I mean, life insurance, the type of traction which was expected earlier when these companies started their business in India, it has not materialized to that extent. Valuation-wise, they are very, very high. If you compare it with LIC, I mean, LIC trades, I will just make it more simpler rather than embedded value. If you look at PE multiples, LIC is less than 20 PE multiples on a trading basis, where most of these life insurance companies are trading at more than 80 kind of a PE multiple. That includes SBI Life, HDFC Life, ICICI Pru Life. So, valuation comfort comes when the growth trajectory is equally matched, which has not happened in the case of all these three private life insurer players. And now LIC has come into the fore, so there's a choice being there for the investors where a huge valuation comfort is there. The only catch point is whether LIC would be as aggressive as them. Going by the last 2-3 quarters kind of an update as far as new premiums are concerned, or the businesses are concerned, I don't think there is much difference between the type of business traction all these companies are getting, be it LIC or the life insurance. So that is a pure, segmental play for life insurance, why these private players are not perform. GIC has been gaining traction because the economy is growing at large and you need insurance to be in place, particularly the motor vehicle spaces where these companies are gaining maximum traction. And we have seen a good trajectory coming out there. So, I mean, that is the reason why we are consistently seeing traction in GIC. And in GIC space, it's more of the private players who gains the maximum traction rather than the government counterparts. So that's the difference, I think.
Okay. So let me just play the devil's advocate here. Dharmeshi, your top pick and your top choice between SBI Life and ICICI General Insurance, both of them are at record highs. We are chasing momentum here, but what can be done in a market which is, moving on steroids? One choice between them.
Yeah. So, Shailji, I would skip both. I would go by LIC India. The reason being, see, when we buy LIC, I mean insurance stocks, it's more to do with a long-term investment horizon, 3 to 5 years. And from that perspective, I think LIC is where the margin of safety is very high. And if
Kya baat.
this organization takes up a aggressive stand, it will benefit the most.
Okay. What a wonderfully practically oriented advice coming in from Dharmeshi. Two stocks, SBI Life and GIC and ICICI General Insurance are at a record high. And Dharmeshi is looking for marketing of safety in LIC. Ayush, coming to you, what are the medium-term prospects of LIC on your technical charts?
So if you look at LIC, it is trading around 1048 and currently on the verge of making a double bottom formation on its daily charts. Plus weekly charts, we have seen a good higher top, higher bottom formation. We feel LICI can be bought. The first resistance we are facing is around 1090, but we feel that should be broken any which ways. And the first target in the medium term, we are expecting 1300.
Okay. Now let's look at the Nifty back up again. Like I said, it's going to be a flat session as the index, consolidates at record high levels, 22,118 for you. Absolutely flat. There's nothing happening. Let's look at the pullers and draggers on this one. TCS, Infosys, HCL Tech. These are the top three contributors in terms of positivity. 15 points coming in from TCS. About 4 points from Infosys and 3.5 points from HCL Tech. What's pulling the index lower? It's the private banks and Reliance. Axis Bank down about 0.75%, contributing a drop of about 5.5 points. Reliance down 1/3%. HDFC Bank down 0.5%. ICICI slipping at 1,051 and L&T down 0.22%, 3462. A round of profit sales coming into the wider sector as well. Let's look at the volume play within the NSE 500 and talk about sectors that are moving in terms of volume, either on the positive or the negative side. Okay, some bit of space being given to Devyani International. The stock is now down just 3%. The earlier it was down about 5%. Very strong volume play coming in. Paytm is now opened its circuit, therefore trading flat. Nothing much here. Havels. Now this is interesting. This has been a very high beta counter. Ayush, coming to you. Havels for you, already about one time 5-day average has been traded and a very, very strong breakout. 1479. Do we chase this momentum? All-time high is 1504. We had seen it in October of 2021.
So if we look at the Havel chart, it is on the verge of giving a multi-year breakout. As you have rightly mentioned, it is 1504 seen on 29th of October 2021. We feel, and the short-term breakout which Havels has given is already seen in today's chart by forming a double bottom and a pattern formation. Definitely Havels can be bought at current levels, and we are expecting a new 52-week high in this counter, or maybe a new all-time high in this counter. Once that is surpassed, once it starts trading above 1500 levels, we'll see a big rally which will take the stock to 1565 to 1570 levels in the short term.
Okay, and this breakout is happening on fairly strong volumes, 768,000 shares traded, which is always about the daily average of 5 days, and it's just 935. So the first 20 minutes have taken all of 5-day average, and the stock has broken out substantially. What we'll do, ladies and gentlemen, we'll take a very, very quick break, and on the other side of that break, we'll be discussing another record high, which is HDFC AMC, running on SIPs and running on huge assets under management. Stay with us. We'll be back shortly.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe for multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
Welcome back to Market Today. We're experiencing absolutely flat trade on two major indices, which is the Nifty 50, 22,132 in front of you. The Nifty Bank 46,500 down about 57 points. Remember, this is just 2 sessions away from February's FNO expiry, in which both the Nifty and the Bank Nifty have gained more than 3% each. And a lot of stocks in the energy space, in the pharma space, in the public sector banking space have done exceptionally well in terms of double-digit percentage gains that they have given to investors and traders over the last month. Ayush is with us, and let's just now look at HDFC AMC. Now, this is a high-ticket item. Let's just take a technical view on this one. Of course, it's at a record high, and we'll discuss the back end of that one a little later. But a phenomenal rally here, Ayush. Breakout in terms of price and volume. 4,044. What would you be doing?
Watch for this stock because stock has given a very good breakout, but it has already zoomed up 4.5% right now, and the market is flattish right now. So I feel there can be some retracement at higher levels, maybe in some time. So yeah, so the ideal buying zone for this stock is around 3900 to 3925 levels. If we get it in those levels, then it is going to be a good, it will be favorable risk reward wise. Currently, I would request all the traders or investors to wait and watch and wait for some consolidation or maybe some retracement, because it has already zoomed up 4.5%.
We have been discussing HDFC AMC last week as well. And if you see the monthly chart of HDFC AMC, it's a phenomenal rally that started in April of 2023 when the stock was at 1750 rupees. From April of 2023 to now, each month, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 for 11 successive months consistently. Each month, HDFC AMC has closed at a higher high at the end of the month, and it's just taken out its all time high of 3,834 in the month of February. So, this blowout that has happened on the stock is primarily driven by a very, very strong underlying change, which is the financialization of assets that's happening in India. A lot of people are putting in newer and higher SIPs, and the assets under management for AMCs have shot through the roof over the last 1 year or so. HDFC AMC, one of the pioneers of long term wealth creation over the last 30, 35 years, has been one of the biggest beneficiaries of this financialization of assets, as also companies such as Angel One, as also companies such as 361, and among others, stocks such as Anand Rathi Wealth. So these are the 3 or 4 companies that have done phenomenally well. It's almost 9:40, Ayush. Anything in the market that catches your attention?
So I'm looking at the charts of HDFC Life here. HDFC Life is about to give a breakout of its downward sloping trend line on its intraday charts. It is trading around 578 right now. Once it crosses 580, we feel we can take a buying position in this stock for a target of 600 for the short term. And if 600 is surpassed, then we can see 620 levels in the coming days by keeping a strict stop loss of 567 here.
Okay. HDFC Life, let me just also see the stock price performance. As I had mentioned earlier, this is one of those very, very disappointing stocks that have, failed to create long-term wealth for their investors. At the moment, a rare stock which is trading below its 200-day DMA, 578. The most recent high that we had seen was 708. Hit somewhere in the middle of December. So a downward spiral for the last 3 months. But the strength that we are observing in ICICI Lombard and SBI Life seems to give Ayush some hope on HDFC Life as well. Let's also now shift focus and get back into the FNO space. I see Biocon moving fairly rapidly. 2.9% higher. This seems to be a swing trade in the making. Ayush, 4 or 5 days of serious losses and now an uptick on Biocon with decent volumes. We've already seen about 30 lakh 99,000 shares being traded.
So Biocon has performed really well from the downward levels. It has made the double bottom formation on this daily chart as well as monthly chart. On the daily chart, it has taken a good support of its 50-day moving average, which was around 270. And in today's trading session, it has given a breakout of its 20-day moving average also, which is 277. It is currently trading around 280 levels right now. And I feel Biocon can be bought at current levels. The first target we are looking here is 295. If that is surpassed, then we will see a big trendline breakout also in the stock, which will take the stock further towards 315 to 320 levels.
Okay, so this is what's buzzing on Biocon. Let's look at some other counters that are now moving in the Nifty 50 index is now gathering some stream, 18 points higher, 22,140. Let's look at the index watch. These are, of course, the top 10 stocks in terms of market weight within the Nifty. Let's look at their performance. Out of 10, 7 are in the red, 4 are in the green, led by, of course, TCS 1.5% higher. We've had a green tick coming on TCS from Dharmeshji. SBI, Kotak, and ICICI Bank are in the red. L&T also providing some comfort. Ayush, L&T has been a stock that was in pain despite a fairly strong third quarter number. Now that pain seems to be seeping out of the stock at about a 3-week high on L&T. What are the charts telling you? Gains for the fourth day in a row.
Right. So LNT I've been recommending from quite some time now, approximately from 2500 levels. And in today's, if we look at the current chart of LNT, it has made a good rounding bottom formation by taking a support of its 100-day moving average, which was around 32.85. And right now, if we look at the stock, it has successfully opened and surpassed its 50-day moving average also, which was 31.70. So LNT can definitely be bought. There's a gap resistance on the upside, which is currently at 35.40 to 35.50, which I feel it should be broken. And the targets we are looking right now at 36.50, and the stop loss we'll maintain here is 34.49.
Okay. What else is now coming in my scans? Let's just see the trend theme. Nestle, how interesting. I'm sure people have not noticed. I'm sure this has not gone unnoticed. We'll draw a long-term chart of Nestle. And yes, the stock has moved 8 days in a row in positive direction. That's 25.80. I remember it was under some selling pressure after that 10-for-1 stock split that came into impact on 5th of January. 25.81. Normally, Ayush, we discuss high momentum and high beta stocks. Nestle is a slow mover, but what do you think? Please don't get worried about this percentage change that you see. We have to show a bonus adjustment. This stock is actually quoting at about 25,800. Ayush, coming to you.
Yes. So we have seen Nestle, which you have rightly mentioned, that 7 to 8 days of rally, and it is continuing. Now it has become sideways from yesterday's trading session and taking a resistance of 25.88 to 2600 level. 2600 is the falling up band, upper band resistance, which Nestle is currently taking. So I feel so it's a low momentum stock. I feel Nestle can be bought once it crosses 2600 on the closing basis. Then only it can be bought. Once 2600 level is taken out on this stock, then we will see a big rally, which will take Nestle to over 2680 levels also. And if someone is already having the position, then we feel by keeping a strict trailing stop loss, one should keep a position which is 2550.
Okay. Similarly, if stocks are rising for 8 days in a row, there are stocks that are falling 7 days in a row. And that unusual, if not problematic scenario is faced by, ladies and gentlemen, Hero Motors. The stock had hit an all-time high of somewhere like 4,948 in Feb of 12th. Now slipping lower to 44.73. Ayush, do you see some hope for long-term swing traders on the long side for Hero Motors? Where do you see it taking support?
The support zone lies at its 50-day moving average, which is approximately around 43.90, which is approximately 80 points from here. So I think that should be the place where the stock should take a support. The last time the stock has tested this 50-day moving average, that was on 2nd November 2023. And this time it's going to test it for the first time. So I feel it is going to be a strong support zone, which is around 43.90. If it sustains around 43.90 and if it is consolidating over there, then we can see a trend reversal here, which can take again this, which can initiate buying positions in this stock. So we have to wait till 43.90 here.
Okay, fair point. And of course, the run-up had been very, very sharp on a mediocre performance performers such as Hero Motors. Nevertheless, stocks move both on the long and the short side, and Hero Motors at the moment showing distinct signs of very strong profit booking. Okay, let me just show you something really interesting. Let's look at stocks like Dr. Reddy's and Sun Pharma. The reason why I say this is that both of them are at a record high. Dr. Reddy's 64.18, Sun Pharma 15.60. Both these stocks over the last 8 trading sessions have seen an increase in open interest, which essentially means that positions on the long side have been built up with very distinct strong rollovers. Ayush, to you, what would you prefer, Sun Pharma or Dr. Reddy's?
Shelby, I feel Sun Pharma is I'm pretty comfortable with Sun Pharma right now because the reason it has given a good consolidation and it is on the verge of breakout. The breakout is at around 1570. It is currently trading around 1560. Once it crosses 1570, we'll see a small cup and handle formation on intraday 60-minute chart as well, which will give a breakout of 1570. Once 1570 is taken out, the first target we are looking here is 1600, and we have to keep a strict stop loss of 1549 here.
Okay. And another stock which Dharmesh ji mentioned, which is again showing the same signs, is ACC. Ayush, what would you do? For the last 7 trading sessions, open interest has risen dramatically, but the stock has gone in a sideways consolidating phase. What are the medium-term charts of ACC telling you? The stock now bouncing from its 9-day exponential moving average.
So ACC has given a breakout of its flag pattern and it is continuously forming a higher top, higher bottom formation. And even in today's trading session, the open is equal to low. It can be seen in the stock, which is around 2666. And I feel the stock's intraday charts are looking quite positive, and we'll see a trend line breakout on this stock above 2720. So I feel ACC can be bought. I'm preempting the stock. Then once it crosses 2720, I'm seeing an inverse head and shoulder also on the 60-day moving 60-day charts, 60 minutes chart. So definitely ACC can be bought for a target of 2850.
Okay. So now this is interesting. We've discussed stocks which have shown a very decent uptick in open interest as well as price. Let's look at long buildups along with a change in price and open interest on the positive side. Okay, we've discussed HDFC AMC, and this is accompanied by a 10% rise in open interest as well. We've also discussed ICICI General Insurance, and now it's the time to focus on 2 heavyweights. Trent, 2.9% higher, accompanied by a 6% rise in open interest. Ayush, your views on Trent?
So Trent is one of my favorite stock. I've been recommended from approximately 1800 levels, which was around August 2023 levels. And I feel Trent is still looking very good. It has formed a good flag pattern formation and it is consolidating from 8th of Feb till now. And we are seeing a breakout in today's session. It has given a downward sloping trend line breakout. And I feel Trent can be bought at current levels for a target of 4100. The stop loss you have to maintain here is 3820.
Okay. This is, a rundown of all the softwares that I have in terms of tracking different formats, rising OI, rising price, rising OI, falling price. And these, I'm sure, are very helpful in decision making as far as medium-term trends are concerned. Let's also look at some more interesting things. Now I'm talking about stocks that had a bullish gap up. And let's look at JK Cement. This is a cement theme that's running in the market. And JK Cement, ladies and gentlemen, has made a fresh high. It's a mid-cap cement maker, which is rising for the last 5 sessions. What would you do, Ayush? Because you are young, would you be chasing momentum? Or because you are intelligent, you would be advising caution?
Well, I feel it has already zoomed up 3.5%, and we are seeing a good rally. Again, it has moved outside its Bollinger Band zone, and it is currently in the overbought zone. So I feel a slight consolidation is required here in the stock to play the momentum. So 4470 is the ideal buying zone for this, which is approximately 70 rupees from here downside. So 4470 at this price and risk reward will be more favorable. But if someone is already holding the position, I wouldn't recommend to exit from here. I'll just recommend to keep a strict trading stop loss of 4500 here.
Okay. That, ladies and gentlemen, would now be the final stock that we've discussed on market today on this lovely Tuesday morning. Ayush, thank you so much. It was very nice talking to you. Wonderful and very sensible advice coming in. Your chart reading skills are phenomenal. And let's hope and pray that they improve dramatically.
Thank you. Thank you so much, Shelby. Thank you for having me here. Thank you.
Okay. With that, ladies and gentlemen, let's do a final market check. The Nifty is now almost at its day's high, 22,150 for you, 23 points higher. Remember, we are just 2 sessions away from the end of what has been a fabulous FNO expiry for not only the index, but a host of its components. The Nifty Bank, flat as it can be, 46,580 for you. After 4 days of successive falls, there is hope that 46,500 will be retained by the bulls. The 500 index, the Nifty 50, now a third of a percent higher, 20,311. The IT index at the moment, the top gainer, 0.5% higher, almost 37,800 for you. A very quick look at the all-time highs as far as the Nifty is concerned. It's dominated by infrastructure plays. So real estate players, Sobha Developers, 1657, 4.5% higher. We have JK Cement, 4536, 3% higher. We have Birla Corporation, another cement space mid-cap stock, 1796, 3% higher. We have a smattering of pharma stocks, Cipla, almost a percent higher, 1481, fresh record high. Zydus Life, 950, a percent higher. We have then the financialization theme, NAM India. This is again a brokerage. This is again a mutual fund. Nippon India Asset, 543.6% higher, and HDFC MNC now clocking a new digit in the 4,000 rupees space, 4,010, 3.3% higher. In terms of volume buzzers, you have a very strong move coming in. PNC Infra, 458.45, 2.5% higher, almost 9.8 lakh shares traded. Havels, we've discussed, 1465, 2.9% higher, 1.6%, 1.6 times 5-day average. Dabur, Paytm, Birla Corp, Praj Industries, all rising on substantially high volumes. That will be all, ladies and gentlemen, on this lovely Tuesday morning. And we'll be back with you with all the best news that there is in the financial markets. Stay glued to Business Today Television. Thank you for viewing us.
Darwin Platform Group of Companies is one of the fastest growing diversified Indian conglomerates with global footprints. It is setting up offices globally and tying up with companies across the globe from multiple sectors. The company has ventured into real estate and construction, stockbroking and finance, arms and ammunition, mining, airlines, and many other sectors.
I put before you today 10 propositions that to my mind describe the current state of the world, and in each case how Bharat would and should respond. So let us begin. First,